Welcome, everybody, to today's edition of the Coffee Break Podcast. My name is Zach Graveson. It is Monday, January 15th, and with me is the man with the financial plan, Chris Fournier. How are we doing, sir?
We're doing great. I'm excited. You know why? What am I holding up right now?
10. Hey, congratulations.
Yeah, our 10th episode for the FG Coffee Break. So we're on a roll. I love it. Every single week. We haven't missed a week yet.
And so everybody who has been sticking around listening to us, thank you very much. We appreciate it. And this is going in the right direction. Our priority was to really get some reps in. So even though we're averaging maybe 10, 15 listeners, I'm very proud of those 15 listeners.
Exactly.
And we're constantly getting better, looking to add more value in these things. And we're learning how to do a podcast. So again, we're not trying to make it a million subs by episode 100. We're trying to make it to episode 100. That's going to be an accomplishment within itself.
That's right.
So episode 10, adding a little bit more structure. What do I mean by that is that we want to talk a bit more about headlines that are going on, things you're hearing on the news. Hopefully we could touch on some of those points, because most people and investors, I'm sure, Chris, you get the conversations where people hear something in the news and they'll think about their investments.
Mm-hmm.
You know, like this week, what do we have? We had inflation is up, some troubles at Boeing. That was pretty crazy. I don't know if you saw the video. Other than that, we have, I just saw this morning on LinkedIn, Google cuts hundreds of jobs again after they just cut, I think it was like 12,000 last year. So a lot of stuff going on. And then after that, we're going to bring in some other topics that maybe we read in books and all that. So today I want to talk about a book that I read called 10X is Easier Than 2X. So improve yourself 10 times is actually easier than improving yourself just twice, being twice as good. So sounds weird, but Chris, you were there when we had the talk, and we actually talked personally to the author last year when we were in Banff. So we're going to touch on that. But first, these headlines. So we have Boeing, we have the inflation, and we have Google. What do you want to touch on today, Chris?
You know, let's start with Boeing. I mean, why? Last year was actually the year probably that I traveled the most in my life. Why? We took advantage of it. My little man was his first year. My wife was off on maternity leave. So we decided to, you know what, let's travel, let's enjoy it. We worked extremely hard, blitzed our client meeting. So we were able to get away. So I think we took the plane at least 8 or 10 times last year, which was, I mean, growing up, I might have flown maybe 6 times in my whole life. My little man right there, 1 year, bang, gets to fly all over the place. What's so alarming? I mean, we're in a plane right now. I'm already anxious. I'm already an anxious flyer. Next thing you know,
this week, you? Okay.
Yeah, I'm an anxious
flyer. You travel
flyer.
a lot to be an anxious flyer. I'm surprised.
I do. But so, you know, this week you see in the headlines, boom, literally piece of an airplane ripped off while in the air. People, there's an actual video. So what is that? I mean, one, it's going crazy. People are they going to make it back down? Thank God nobody got hurt. The plane landed safely. And now I'm reading every morning, Zach, part of my ritual. I wake up early. I get the Wall Street Journal delivered to me around 3 a.m. every single morning. So when I get up in the morning, it's in my inbox. I go and I start reading. Bang, what do I see? Airbus just received a record amount of orders. I wonder why.
Airbus being a competitor of Boeing, right?
Exactly, that's correct. So another plane manufacturer. Now, are people starting to lose their trust in Boeing? We had troubles in the last couple of years. Boeing has actually been in the headlines quite a bit, not for the right reasons. I mean, you've got some new Maxes crashing, which is very alarming. We have one last week where a part of the plane rips off. Boeing, as of today, is down about 2%. Guess what? Airbus is up about 3.7%. Is that just share ownership getting transferred to another airplane manufacturer?
Good point.
These things happen. I don't know, is it correlation, causation, or whatnot? But it's interesting to see how money flows, what happens, and I mean, everyone that we know, I mean, people like to travel. How do you travel? Mm-hmm. You travel by plane, and it is an extremely safe and reliable way to go. But when you see these things happen, it's, you know, you start to question yourself. So the good thing is you saw I believe it's the FAA that they grounded all of those planes models. They checked them, and that mean at least it's extremely structured. So I'm not worried. I mean, I'll hop on another plane tomorrow if needed, but you just see that anything can happen. And I kind of call that, Zach. I love the books and the stuff by Nassim Nicholas Taleb talks about a black swan event. For me, that is a black swan event. The fact that you're in a plane and a part of the plane flies off, that's a one in a million chances of happening.
Mhm.
So you never know. And I just wanted it was interesting to see the correlation of what goes on after in the markets, the orders, how quick it was too. So it's food for thought.
So I have a question that isn't specific to Boeing, but specific to a publicly traded company that has some type of controversy. And
Yeah.
other examples, I recently read the Elon Musk book. There's a big thing around Tesla stock shares where when Elon Musk went on the Joe Rogan podcast, smoked a
Yeah.
bit of weed. There was a big controversy
Yes.
around that. Tesla stock crashed. Or actually, Elon recently, I don't know if you saw that too, in the news about people, stockholders worried about his drug consumption, but are
Yeah.
these
Yeah.
alleged drug consumption, so there's stuff around that too. But not to make it about Elon and drugs, but more about when companies, when you do see these controversies happen on the market with publicly traded companies, for example, Boeing.
Yeah.
If I'm an investor, and obviously I don't trade stocks, individual stocks, but a lot of people do.
Yeah.
At the end of the day, let's be honest, a lot of
Exactly.
people do. They like to do it. I think it's more of a gambling thing than anything else. But is there some type of opportunity that comes with these controversies where if I see, let's say, if I see something happen where Elon says something dumb on Twitter and the Tesla stock
Mm-hmm.
crashes, well,
Yeah.
I know. Wow. Okay, I got to relax there, but I believe that Elon is a very good CEO, and he,
Mm-hmm.
on the long term, he has a very long term view. And I believe that Elon is going to always have a profitable company, and he's going to fix things. Like right now, if I could buy some Twitter stock or X, I would buy it. Why? Because I believe that it would be at it would be very low, but I believe in the long term there's an opportunity. But with these short black swan events like we had at Boeing, is that
Yeah.
something where portfolio managers or whatever, is there an opportunity there? Or how do you, I don't know, this is just kind of
Yeah.
how my brain
No,
works,
no, and
but is there
I
any truth
love
in
the
that? Is
fact
there any opportunity? And how do portfolio managers see those events?
that you brought that up, Zach, because there are contrarian managers that they not that they're happy when these things happen. It sounds kind of morbid, but that they will take advantage of these situations. And you know why? Because it comes down to us people. We are irrational. When we react to something, we overboard it sometimes. So we hear a negative
All the
headline,
time.
we think the
Yeah.
world is ending. So profits could be the same. There could have been no material change in the actual structure of a business or a company or whatnot. But with a headline, it could drop 10%, 15%. There could be something that it's inexplicable. So that's where some of the smart money, some of these managers, they'll take advantage of that. Uh, Look, I'm not going to get it perfectly right, but there was a story with American Express at the time where Warren Buffett made a lot of money on this trade because American Express was heavily invested in either this oil company, and they had these cylinders where they thought they were maxed out in oil, but they realized that this company was actually committing some fraud, and they would put some vegetable oil at the top. So their inventory looked a lot higher than it was. When that news came out, shares of Amex crashed significantly, but nowhere near the actual effect of not having that inventory in place. So there are
Mm.
opportunities where people take these situations and they actually go look at the numbers. We saw it with COVID and some of our good managers. We have some fund managers that bought stocks that they said, you know what? Yes, everything crashed by because the whole market went down, but our companies, they're still making more money. Nothing changed. That's why we're going to reinvest more. And once the market realized that there was no material change to that, these companies, one, they came back up extremely quick, and they kept growing afterwards. So we can't be irrational. If you see something happen, you have to just sit back, take some time to breathe, and then, all right, what do I do now?
Okay. Okay. I like that. And speaking of something going up where we thought that was done, what
Yeah.
the hell's going on with inflation?
Yeah. So
I
inflation's,
saw that it's up 3.4%.
yeah.
And the first thing that came to my mind, again, you're my truth teller. So I always rebound ideas off for you, and then I see, am I overreacting or whatever? So I always like to share these. But first thing that went through my mind is we're at 3.4%. Inflation is up. I'm happy I took a 5-year fixed on my mortgage, because what's going to happen with interest rates? Because I feel like that's just a resounding topic over and over every month, because everybody seems like they're waiting for them to go down. And we thought they were going to go down maybe beginning of the third quarter of 2024. But now
Mhm.
inflation's up. Is that something that people should be worried about, or is that typical for that time of year? I don't know. What do you think?
It's a great question. You know what? The good thing is the trend's been going down. So October came in at 3.2, November 3.1, now at 3.4. Oh, we see a little uptick. What could it be? December. It's Christmas. We're spending more. So I'm not too worried. I'd want to wait a couple months to see, is it maintaining? Is it actually going down? Uh, so I'm not too worried about that. I think that, and look, Zach, we see it that people are starting to struggle. Everything
Mm.
costs more. Every meeting I'm in, there's not one meeting where there's no comment of, hey, my gas is more expensive now. Where I just tried to go and get a McDonald's Big Mac and it cost me $10, $15 now. Like, what's going on, you know? So people realize that people have less income to spend. Salaries aren't going up. Where you talked about some layoffs, there's layoffs going on too. So
Yeah.
I'd have to wait a couple months to see what's actually happening. Right now, I'm not worried. But with that said, I think it's still a good time to up your fixed income proportion. If you're retired,
Mm.
you're a bit more conservative. But in the last couple of years, there was this whole concept of TINA. There is no alternative. Why? Rates were so low, you had to be in stocks if you wanted to make money. Now, there are alternatives. Now it's finding the best alternative. So that's what I'm doing for my clients and our clients there at FG.
Nice. So I want to shift to a book I'm reading right now. You've probably heard it already. Well, I know you've heard it because I've talked about it in our strategy meetings. But if anybody went to business school, especially in marketing, you've heard the term blue ocean.
Mhm.
And right now, I started reading. I had started part of it, but sometimes I start a book and I just don't feel it. So I just feel like it's not the right time. Now I started reading it again, and now I can't put it
You
down.
can't
So
put it down.
now I'm on Blue Ocean Strategy. What is Blue Ocean Strategy? Well, Blue Ocean Strategy is basically the concept of there are red oceans and there are blue oceans. What's a red ocean? Red ocean is where there is so much competition, where people, in order to gain market share, you have to steal it from someone else. You're cannibalizing each other. So
Mhm.
that's why red ocean, the fish are eating each other. There's blood in the ocean. It's red. The concept of a blue ocean is where can you focus your efforts where no one is really paying attention right now. And let's be honest, some markets are capped. There's some markets where, like cell phones, I think we've reached a certain limit on smartphones. Great, give me a better camera, but at the end of the day, it's the same darn phone. And we're actually seeing sales in smartphones go down because I believe it's due to the lack of innovation. But blue ocean doesn't only mean finding that brand new idea that no one's ever thought of before. Sometimes it's just about doing things differently and reallocating
Mhm.
your efforts where people see the most value. I'll give you an example. New York around the 70s and the 80s, I believe it was around the 70s, don't quote me, was in shambles. Was the trust in the police force was at 37%. The
Yeah.
metro stations were filled with crime. beggars and all that. It was not a good time for New York. And now a new chief of police came in. I don't have the name, but it's a great story in the book. And they talk about the allocation of resources where if you're a company, sometimes you don't necessarily just have, oh, let's bring in a new 100,000, and new 100,000 of resources is going to equal to a proportionate amount of new output or new sales or
Mm-hmm.
whatever it may be. In public services like a police force, there's very limited budget because it's a public service. So usually
Yep.
it's how to allocate the budget the right way, or your resources the right way, to get that blue ocean where other people aren't, or ways where you can maximize your resources.
Mm-hmm.
So I'm getting to a point here where everybody can relate to. But what I loved about this story is that the big problem was in the metro station. Well, first of all, they were focusing on big crime instead of, I think it was quality of life crimes that they were considering. So
Okay. Yeah.
this
Yeah.
new chief of police focused on quality of life crimes.
Okay.
One thing he did is he, for the first time, no chief of police had done that. He rode the metro. He rode the subway. He went
Okay.
around and he lived it himself. And that's what opened his eyes, because they were getting complaints from citizens all over the place. People, New Yorkers, were complaining, but they were focused on, let's say, the mobsters or whatever, the big
Mm-hmm.
cases. And then he rode the subway and he's like, this is ridiculous. No one can do that. But one of his biggest challenges was getting more funds or whatever, because the other top tier, well, things were always done a certain way. So one thing he did is that he had other top level, higher levels, people who control the budget. I'm not going to say the right terms, but he had them ride the subway. Soon as
Okay.
that happened, all right, yeah, this is a priority. Now we need to make a change. The point I'm getting to is that he didn't have more cops. They have 36,000 cops back in the day. He couldn't just create more cops. Being a cop was not an attractive job either. Low pay, bunch of crime, dangerous job.
Mm-hmm.
So what he did is he spread out a whole map in front of his team of all the different metro stations. And the way they did it before is they had an equal amount of cops at each metro station. They just spread it out evenly. But then
Okay.
he noticed out of these hundreds of stops, there's only like 15 where 80% of the crime, Pareto principle again, 80
Yeah.
20.
We always
There,
find
like
it everywhere.
20% of the stations are where 80% of the crime was. So what he did, he's capped on the number of cops he could use. He just used that and just put way more cops in these stations. And he did a bunch of different changes like that where I could talk about this all day, but where he reallocated resources. And I think it's really interesting for people who own a business, especially us, where we're starting our second business with founders and resources are limited. So it's like, okay, well, we got to focus on what's the most important. We had it recently in our marketing. We
Yeah.
told our marketing guy, Ryan, who helps us with all our content, to focus on just a few things, but more quality. And we're going to take on some of the workload.
Exactly.
So I thought that Blue Ocean was really interesting as a concept of finding that niche. Personally, if I could talk for ourselves, founders, there's not a lot of exit planning in Quebec. There's no certified exit planners that are certified from the Exit Planning Institute in Quebec. I
Mm-hmm.
believe we found some type of blue ocean there.
I totally
Um,
agree.
uh, to be continued. But then also the concept of finding your resources, and if they're limited, to just being able to find where are they going to have the biggest impact and reallocate, and maybe going against conventional wisdom of just having cops at every station and then putting them in strategic places, like the same way that you're going to put money in strategic places
Mm-hmm.
instead of just everywhere.
That's a great point, Zach. And while we're talking about crime, and before we move on to our next book that you wanted to discuss about,
Mm-hmm.
I'll take 2 3 minutes. I just read the introduction or the first chapter, Freakonomics. Have you heard of the
Oh,
book?
I've heard of that. Yeah.
So we have to be careful sometimes too with what is like causation, correlation. Is it's what we see. He starts the book off, and it's pretty mind blowing. Uh, Crime in the end of the 1990s, early 2000s was expected to keep exploding. It was on the craziest uptrend, and then a couple of years go by, and they see the trend is actually going down quite significantly. You know what happened, and I'm not don't quote me on this as well, but the premise of the story, it's something that happened 20 years ago that came and contributed to the lowering of the crime. And you know what that was?
The first thing that
Roe
comes to
versus
mind is something that has to do.
I was
Oh,
gonna say, but go ahead.
did I lose you?
I'm still here. Can you hear me?
Okay. Yeah.
Hello? I'm,
Um.
I'm
Uh,
back.
okay. I don't. The first thing that came to mind when you said something that happened 20 years ago, I thought of something that has to do with the birth rate or something like that.
Roe versus Wade. So I'm not gonna get into the pro-life, pro-abortion discussion,
Oh, Roe versus
but
Wade.
but
Okay.
just the fact that it became illegal to have sorry that they people had the choice to go through abortion, the crime rate started going down significantly because they found that a lot of the crime in prior years was committed by low income families, maybe mothers that were having kids out of wedlock that weren't in a situation where they could raise a family. So the demographic of the people that would grow up to commit these crimes actually sometimes came from these or dysfunctional families. But people thought it was because of the lack of police presence or lack of this. So in this book in Freakonomics, they go and look at very tough and try to go in depth of why actually things happen that maybe don't seem as obvious as they do. And that was one when I read that is holy one, how did they come up with that? And two, it kind of makes sense. So yeah, it's
Yeah.
just a
Well.
little piece of information there that I wanted to share that I found interesting.
No. Yeah. That's pretty wild, and that's a cool concept of the book. I'm curious to hear more. Now, I want to talk about the concept of why 10x is easier than 2x. Sounds ridiculous, but basically how I got this book and how Chris got this book, it's by Benjamin Hardy and Dr. Benjamin Hardy, which we met last year at a conference in Banff. We
Yeah.
were invited by our network for financial services to a convention in Banff, and he was one of the speakers. And great speech. It was really good. We got to meet him at the end, gave us books, signed the books, which was really cool. But I think this is an interesting topic because when you hear 10x is easier than 2x, and now we're talking about your progress, why progressing 10x is easier than 2x.
Yeah.
It's a really fascinating concept. And basically, what it is I'll say it real quick as fast as I can, but he talks about the story of his son who's a tennis player. And he asked his son, he's like, with what you're doing right now, you're training regularly and all that. Do you think you can make it to be a college athlete? Son says, yeah. And he says, do you think you could be a professional athlete? And son's like, well, no, not with what I'm doing right now. It's like, why is that? What would you have to do? He's like, well, I would have to train every day. I'd have to stretch regularly. I'd have to eat right. I would
Get a
have
better
to get
coach.
a better coach and whatever. So he's saying this specific way of how he would get to the pros, and think of getting to the pros as getting 10x better. He
Yeah.
has to really make this massive jump in his progress. He has to progress way faster than he is right now, and take the college route as just 2x. Hey, if I keep doing this, yeah, I'm going to keep getting better, which is true. If you keep putting in the time and all that, you'll get better. But when you asked him, how would you go pro? Well, there was a more obvious answer. And one of his first concepts is that there's not as many paths to getting 10x better than 2x. Let's give an example with me personally. Well, if I wanted to get twice as good as I was last year, this year at FJ and Associates selling insurance, meeting clients, making sure that they're protected, what could I do? I could keep doing my calls. I could, keep good relationships with our partners and all that. And I'm going to keep progressing because business is growing. I'm going to have a constant progression. But if you told me, hey, Zach, how can you get twice? There's a bunch of ways I could do it. Hey, I can prospect on LinkedIn. I could go have speaking engagements or whatever, go in schools or go in offices and talk to them. There's a bunch of ways where I could have a steady progress. If you told me, hey, Zach, you absolutely need to get 10 times as many sales for next year, there's not 1,000 different ways I could do it because it's such a hard thing to do. So there would be, all right, well, now I absolutely have to talk to 100 people a day, a week, a day. I have to have 2 speaking engagements every month to talk to groups. I have to sell group insurance. I have to sell corporate insurance, whatever. So there's a more obvious path. And basically, one of the reasons why 10x is easier than 2x, because the path is a lot more, it's much clearer. There's not that many ways where you can get 10x better. So the clarity around how am I going to get there and the things I have to do to get there are much more obvious. Because let's say you're trying to lose weight. Let's say you're trying to lose 50 pounds instead of losing 5 pounds. 5 pounds, well, hey, if I go on a walk every day, I might hit 5 pounds. Hey, if I do 2 workouts this week, I might be able to lose 5 pounds. Hey, if I just cut out sugar, I'll definitely be able to lose 5 pounds. If I want to lose 50, I got to work out every day. I got to include some cardio. I got to eat right. I got it. So there's so many things that you absolutely must do. So that's one of his ways. And I'll kind of let you touch on that a bit. But that's kind of one of the ways where he says 10x is easier than 2x.
And one of the other reasons, Zach, that it is easier is there's less people doing it. That was another piece. So I'll give you an example. There's maybe, let's say with the tennis example, there's maybe thousands of other kids putting in that same amount of work with the vision of going to college and playing tennis. But how many at that age are saying, you know what, I'm going pro right there. They're not even at college yet. And then they got the coach, they got this, they got that. It gets easier. So for business, whatever it is that you're doing, one, there's going to be less competition. There'll be less people doing what is needed to 10x, because like you said, it's pretty clear what you'll need to do to 10x, because there's not a million other options like a 2x option. If I want to double my business, all right, I can go on the same path that I'm going. I can keep doing these things. I'll get there someday. But if I want to 10x it, I have to change things drastically in order to reach that, because naturally it will not happen. And I think it's one of the best concepts that you can apply. And it's like that quote, if shoot for the stars and you'll land among the moon, or shoot for the moon, you'll land amongst the stars, something like that. I mean, if you aim high, you'll land pretty well. So if I aim to, no, go ahead.
Well, all I was going to say that it kind of relates to another concept where, and I am not saying this because I believe I'm in the top 1%. I am so far from that. But I do believe that this statement is true. That if you want to be part of the top 1%, you got to do things that only 1% of people are willing to do.
Yeah.
So if everybody, so I'll bring you back to football. When I was playing football, everybody had a team workout. You had to be there. It was mandatory. And at first I came in CJEP and I was a quarterback trying to play receiver. I was undersized and all that. And the way I saw it is, well, everybody's on top of me right now. I'm at the bottom of the depth chart. I just barely made the team. I didn't sign. I didn't whatever. I'm not even dressed on game day. This is early CJEP. So if I just do the team workouts, we're all going to progress at the same rate. There's no way I'm going to catch up to them. So I got to be willing to do so much more so I can gain that ground, the difference they have on me. So it's the same thing in business. Right now, we're a new business, and the regular financial services firm, well, what are they doing? They call back their clients. They have meetings. They probably get referrals, and they do that. But how many of them are putting content out there?
Yeah.
Let's just say 50% are putting out content. We just eliminated 50% of the competition. Not saying that we're better than that 50%, but now we're doing more. So in the long-term perspective, over time, we are progressing faster. So now we're starting to catch up. That's the way I think. Then another thing we're doing. Okay, well, hey, Zach, let's do a podcast where we can talk about headlines, talk about investments and small tricks like that to help people out. It's not going to give us any money in return, but that's how we're going to help our brand image and show people that we are here to help people achieve financial security, freedom, peace of mind. Let's do a podcast. How many have a podcast? Now we're probably down at 10%. How many have a 30-year vision, who aren't just in there to make it about the money right now, who want to build a team, make it sustainable, and are here for the next 30 years? Because the average advisor is probably 56. We're not even in our 30s yet. Or did you hit 30?
Not
you're
yet.
About to.
About to. Yeah,
okay.
It's coming
this
up.
year. Yeah, we're 94 babies. So this is the year. So again, who has 30 years in front? So who has 30 years in front of them, a podcast, putting out content? We're not part of the 1%, but right now I know that me and you are willing to do what only 1% are willing to do. So that, I think, is part of the 10x is easier than 2x. And also, to bring it back full circle, we're in a blue ocean in some way because there's not a lot of people doing this. And I'll even add this. What was marketing wise for both our companies, Founders and FG and Associates? What is the biggest change we're doing content wise for Founders that we shifted from what we originally thought? And it has to do with going into a blue ocean.
Go ahead.
French.
Yeah.
Founders is going to be, and this is out of my comfort zone, but all the content on Founders is really going to be focused around French speaking, targeting the Quebecois business owners. Why? Because we're in Quebec. People who have to sell the business, they're more in from the boomer generation and all that. And there's a lot more French there. So for us, we were just putting a stick in our wheel by doing it in English, even though it was so much easier and we can go get a wider audience. But what we decided is our conclusion was we're going to start so small, so niche in French, and then we're going to earn the right to do it in a more national level, bilingual English or whatever. Founders right now, we're starting French in Quebec. And even on my end, I'm focusing on if I can help 100 business owners in Sherbrooke, where I am right now.
Yeah.
Sherbrooke is small. What's cool about it is that I'm seeing those businesses every day.
Exactly.
So when I meet the owner, it's easy to go in the business, be like, hey, Eric, c'est Zach, LinkedIn, so it's a lot easier. So that's one of the ways where we're applying Blue Ocean, 10X, do what only 1% people are willing to do in our own business. And we'll see if it works out. But I have a strong belief that all these things are all going to work out.
I know they will, Zach, and I love the fact that you told them because, like you said, we had our meeting. We said the French market is neglected, especially on the business side, and not only that,
on the content side,
and the culture. A lot of people here in Quebec, they're proud to be business owners. There's a lot of business owners that are Quebecois that they're building businesses that have been sent by families. So that's it's big and it makes a big difference. And you know what? I'm going to share another thing about the 1%. The people that I see that are in the top 1%, Zach, is they are not afraid to spend for coaching. I told you about the podcast I listened to yesterday. This gentleman who went 6 years, by the way, not making under $30,000. Then in his 7th year, every single year after that, made at least $1 million a year. So he's part of I think it's the young the YPO or Young Professionals Order or something like that. He pays $15,000 a year. I know a lot of people that spend a lot of money for consulting. Why? Because they know that they have in their mentality that 10X. On my side, we have an investment consultant. He's one of the top in the industry. We pay for that. We have our marketing guy. We pay for that. We did our SEPA. We paid for that. We spent thousands of dollars last year making sure that we can grow ourselves to better help all of our clients wherever we're going. So to invest in yourself, which then, you're able to invest more in your other ventures, it's such a high ROI, and that I truly believe it.
Yeah, 100%. And we were talking about 10X is easier than 2X. That guy on the podcast that you mentioned that went from 30,000 for 6 years to $1 million and has never been under $1 million since. That's a 33X. So
that's insane.
I mean, we talked about what he did, but that was a really interesting small change that he did. Nothing crazy that he did, but that small change, if he wanted to be 10X better, it was pretty obvious what he had to do. And a minimum was calling all his clients on a regular basis to see if how are things going? Do you need anything? And, obviously there's a lot more work that went into it just than following up with clients. But again, the path to 10X is way more obvious than the path to 2X. The path to losing 50 pounds is way more obvious than the one to lose 5 pounds. 5 pounds is simpler, but 10X, there's no gray area of what you have to do. Or losing 50 pounds, there's no gray area of what you have to do. You can't just work out. You got to work out. You got to train. You got to, drink some water, whatever it may be. So we've already, 35 minutes. So
goes by fast.
We talked a lot about very fast. We talked about Boeing. We talked about the inflation. We talked about Blue Ocean, New York cops. 10x is easier than 2x. So touched on a lot of good things. Before I wrap it up, Chris, any final words to our folks listening to us right now?
I think the biggest takeaway, if you guys had one action to do, is introspect and look in your life. Are there any things that you want to greatly improve on? And then ask yourself, what would I need to do to get 10 times better at that thing, whatever it is? And then from there, map it out, write it down, and see what you come up with. But don't have that mentality of doubling what you're at right now, but literally go out there, because you'll see the actions that you'll need to do, like Zach said, to 10x. You'll see that there's not a million options. And if you stick to those and stick to it consistently, you'll see a massive improvement.
Awesome. Well, on that, folks, thank you so much for listening to another edition of the Coffee Break Podcast with Zach and Chris. Please make sure to follow our page, like, comment if there's anything you want us to talk about, any questions you have. Obviously, we encourage you to follow our Instagram pages, which are fggroup.ca. And now that's going to be public by the time that this podcast comes out. There is founders.io, which is also our website, foundersnoe.io, foundrs.io. That's going to be our new page. There's going to be a lot of French content. There's going to be our podcast, our founder series, where we have business owners on. Now, the first 3 podcasts are with English speaking guests. However, the content will be in French, and we will do our best to promote people here in Quebec. But here, this is going to remain in English because it's more of just me and Chris bouncing ideas off each other. So we don't want to be held back by the language barrier.
Exactly.
Speaking French. So thank you so much for joining us today. Please like, subscribe, comment, spread the word, spread the love, spread the knowledge, and we will see you next week.
Have a great week, everyone. Cheers.